So good afternoon, ladies and gentlemen, and here we are, and welcome to another Monday afternoon Admiral Markets Trading Spotlight webinar. And today it's all about building a simple trading plan using the RSI. I hope you're well. We at Admiral Markets hope that you're all well, you're all safe, you're all following the correct procedures wherever in the world you're joining our webinar for. But we all hope wish you well. But today we're going to talk about, as I said, building a simple trading plan using the RSI. What's on the agenda today? Well, I'll talk a little bit about, what actually is the RSI, okay? We'll talk a little bit about, how do traders use it, talk about how will we use it to create a simple trading plan, and if there's time at the end, we'll have a little look at live markets, because that always helps. And as Robert says there, he's self-isolating at the moment. Fantastic. I hope you're all doing that. I hope you're all following the guidelines. We're Admiral Markets. We want you all safe and here and joining us for many sessions in the future. But I also realize we have quite a wide range of people who join us for our Trading Spotlight webinars. And we appreciate that, some people who are just completely beginners, and there are people here who are experienced traders. So if you have, experience of using the RSI, then please just drop in the chat box what your own experience has been about using it, how you felt, what kind of results it's helped you achieve, or if you're completely new, just let us know if if you're just not even aware of what RSI is here today. So I'm going to touch a little bit about what it is, and there's lots of different ways to use it, but we're going to talk about how to create a simple trading plan. And as I said, stay with us till the end, where if there's time, we'll have a little look at live markets. So, as always, if you don't know me, my name's Paul Wallace. I've been trading for many years. I primarily trade FX indices, commodities, looking to be a trend trader for my kind of swing and end-of-day position trades. And for intraday trading, I'm a mean reversion trader. As you say here, Admiral Markets, okay, they are a truly global brokerage, okay, that is regulated in many environments across the world, provides very competitive spreads for the major trading instruments, and also allows you to engage with the markets using the MT4 and MT5 platform, which are available from your phone, desktop, or browser. And by all means, if you want any more information on that, you can check the Admiral Markets website or get in touch with your account representative, and they'll be happy to guide you. But today, ladies and gentlemen, we want to talk about the trading, okay, and in particular talking about building a simple trading plan using the RSI. So as it says there, the RSI is a popular trading indicator for many traders. However, many newbie traders use it correctly, and hopefully I will help re-educate the complete new traders on the best way to use RSI based upon years of experience, and also from working with lots of traders down the years myself. And we'll realize that there are better ways to use the indicator to help you with your trading decisions. And today we'll show you how you could develop a simple trading plan just using this one indicator, basically, in an effort to help you go away with a simple trading plan using the RSI. And as I said, if you've had experience of it, or if you have a view in it, please, you can more than welcome to put that in the chat box. We really enjoy the interaction. Or if you're watching this later on demand on our YouTube channel, then by all means, if you like it, if it helps you, give us a like. Or if you've got questions, please drop them in there. Or if you've got a thought about a future topic you'd like us to see us cover on the Trading Spotlight webinar series, then by all means put it in there. We enjoy the interaction, and we always enjoy hearing what you'd like us to see us cover in future sessions. So, as I said, what actually is the RSI? The Relative Strength Index, which is its true name, as it says there, is a very popular trading instrument. It's a member of the oscillator family of indicators, and it can help us determine trend, time or entries, and much more. What it means by as an oscillator is that it oscillates between a number 0 and 100, and there are particular areas in there that are of interest to us. So it's developed by J. Wells Wilder back in the 1980s to measure the speed and change of price movements. And it has been a popular trading indicator since then. And you'll find lots of traders, from complete beginners to very experienced traders, will use the RSI as a way and means of determining trend, timing your entries, and much more, which we'll touch upon here. And Robert says there, I use the RSI always and coupled with stochastic. Well, that's great. It's part of becoming a great trader is about finding ideas and concepts and indicators that work well for yourself and melding it into your own trading method that you can take forward, and actually you have confidence and self-belief that you're happy to execute time after time. So today we'll have a little look at the RSI. Maybe it might be different from the way you use RSI, Robert. Hopefully you'll be able to sort of see some different ideas and thoughts, and that can help you with your own development of your own trading method. So, when you put your RSI indicator on a chart, that's what you normally see. It looks like, okay. You can see here that RSI is normally standard settings are based on a 14 period, and you can find that many traders will play about with those different period settings, and you're very welcome to. For today, we're just gonna, as a sort of an introduction to people using the RSI, we're just gonna sort of base it on the standard settings of 14. But what you'll find is, as I said, there are lots of different ways that you can use RSI, just even based upon changes within what kind of periods you use for your RSI settings. But as I said there, you can see it's an oscillator. Okay, it's basically sort of running and shifting between 0 and 100, and that's what we're going to look at and work on with the for the rest of our session here. So Sony says hello. Yep, it's great to see you here, Sony. Thankfully you're here to join us, and you'll be able to sort of learn a bit more about the RSI as we go through. So yeah, as we said before, there's lots of different uses for the RSI. And what you find is that when traders first learn about RSI, they tend to gravitate towards using overbought and oversold values. What does that actually mean? Well, what it means, and let's use the drawing tools here on our fantastic suite of Zoom tools that we have, is that when the RSI is reading above 70, which is this dotted line here, which we'll show you in the next slide or two, well then, traders believe it to be overbought, okay? And any reading below 30, which we'll show here, and I'll show you on the actual platform a little bit later, is deemed to be oversold. But what happens is, many new traders will simply sell a market once it shows that it's overbought, possibly, or they will just basically buy it when it sort of ticks beneath the oversold 30 reading, and they will just do that arbitrarily. However, ladies and gentlemen, there are a lot of problems with that, and it's not a way that I would suggest that you use RSI. You can, and the overbought and oversold elements are of interest, and we will look at them more in particular in a moment, but just arbitrarily sort of selling once it's reached overbought territory above 70, or selling just beneath it once it's gone beneath 30, or rather buying it just beneath once it's gone oversold beneath 30. That is just not a very smart way to operate and to use this indicator, as we'll demonstrate now, ladies and gentlemen. We'll just move on here. So here is what we've got here. We've got a chart here of the DAX. Okay, it's a 4-hour chart where we also have the RSI 14. Okay. So what we want us to see is that, price has just been sort of probably rolling over there after an uptrend. And what we actually see here is the RSI goes beneath 30. Remember what I was saying is that, okay, it's overbought once it's above 70. So we see it here. And once it's gone 30, beneath 30, okay, it's deemed to be oversold. So many people will be buying. If you've just, bought as soon as price went into the oversold, well, in this particular case, you'd have been buying the DAX around about here, probably when the market opens, okay, on the next week. But as you can see, price continues a long way down, okay. And this is the challenge, just arbitrarily, okay, selling when it's overbought and buying when it's oversold can lead you into trouble, because experienced traders will know just because an indicator says it's overbought or oversold doesn't mean that the price is going to reverse. Price, as you can see here, can actually go, in this particular case, oversold, and it can stay oversold for a long while. This is, this is a 4-hour chart, so this would be for about a week. Okay, we're not sort of closed the week out, and you can see how far that price has traveled against us if we had just arbitrarily bought that market on the Monday morning based on the RSI going oversold. So by all means, you can take notice of when prices go supposedly overbought and oversold, but invariably just sort of arbitrarily buying and selling is not really the smart way to operate. Okay, and as I said, new traders quite often fall into that trap. They think that that is, a quick and easy way, but I can assure you it doesn't work. All right, it doesn't work, traders. So what we want is to sort of give you a little bit more about a trading idea, or kind of trading thought and plan that you can utilize that will help you avoid these kind of traps. All right, that's what we're looking for. All right, that's what we want to try and do, that you can take away and utilize in your own trading going forward. Okay, over the next couple of days and weeks, whilst you're self-isolating like Robert. So here is how we're going to start to use it. Here's how we're going to start to be interested in using the RSI. So So Seamus says, I still don't understand it. Can you explain it more? Absolutely, Seamus. What's going to happen is, as we go through over the next few slides, I'm going to explain a bit of a range, okay, of ideas about the RSI. I'm going to show you a very simple trading plan, and then we're going to switch to live charts, and we'll actually go through and have a look at how it's setting up in particular live markets at the moment. So have no fear. There are lots and lots of examples coming your way. But here's how we're going to start to look at using the RSI. So instead of using just the overbought and oversold regions just arbitrarily, we're going to actually focus on using the center line. So what you can see here is I've just taken a snapshot of an RSI from a chart there, and what I've done is I've drawn on a center line on our RSI indicator, just using a simple horizontal line for whether you're on MT4 or MT5, okay? And I'll show you how you can do that, okay, when we switch across to the live charts. And I've just amended it to basically, it always shows 50 there, okay? And so now we have the opportunity to use the center line for a bias, okay, to give us an indication. So, and here is how we will look to use this RSI in the first phase. In the first phase, you're going to use when the indicator is above the 50 line, we have a bullish bias, okay? We'll be looking for bullish opportunities to buy. And when the indicator is below the 50, well, then we would have a bearish bias. Then we would be looking for sells, okay? So you just draw on a sort of a center line there at 50, and when price is above 50, we're looking to be bullish. When price is below 50, we'd be looking to have a bearish, a selling bias. That's phase one. Hopefully that's just nice and clear. And what we'll do, as I said, I'll show you on a few charts, okay, and show you on live examples how to set this up, so you're actually able to sort of see how it works in reality for you. So make sure you stick with us till the end to sort of see how that unfolds. So here is a chart of the Australian dollar on the weekly. This is just a weekly chart, and probably should straight that what we're talking about here is showing is that RSI is applicable to all instruments across all time frames, and I'm going to show you, the sort of the trading plan that we're going to share with you today will allow you to operate across pretty much all time frames and all instruments. We want to be, we've talked about being a trader who can operate on any instrument, any time frame, in any direction. That's what we're continuing with here. For this particular example, we're looking at the Australian dollar on the weekly chart, okay? And what you can see, hopefully, is invariably is the price has actually just been in a downtrend, okay? It's just been grinding its way down in its trend, okay? Had a little bit of a pop up here, but it's continued down. It's beneath that 200 period moving average, beneath that 50 period moving average as well, and it has just been sort of drifting its way down there, grinding its way. But if we look at our RSI as well, if we have our center line of 50 here, what we can also see is that, yes, we were oversold here, but actually prices, for the most part, just actually stayed beneath the 50 level, okay? And in fact, actually the 50 level, you can see, is actually acted as a kind of almost like an element of sort of resistance there. We had a little nudge there, and actually we came above it here at the end, but we had a bit of a deeper pullback before price continued to re-exert itself back down on the downside. So, you know, as I said, what we're looking for is we're going to just use that center line as almost a kind of an indicator for whether we should have a bullish or bearish bias in our trade view. And just, you know, utilizing that just makes it quite simple for us. It's quite visual. You can see that, you can take a reading, okay? You can very quickly identify, you know, are we in a kind of a bullish opportunity or are we in a bearish opportunity? Just by using that 50 center line on the RSI, okay? That just helps us just give a little bit more clarity, a little bit more thought about what we're actually doing. So hopefully, Ashema, that's just giving you just the first step, okay? A little bit of an understanding, better understanding how we're going to use RSI and what we're going to be looking for when we come to operate with it as we add elements, more elements of the trading plan in the next few slides. So, so how can we use this information to help us build a trade plan? Well, what we can start to do is to utilize this bias to help us take entries into trends. We're going to use this information to help us build a very small pullback trading plan, an opportunity for us to look to enter trends on pullbacks as they sort of unfold and develop. And for this, we're going to actually utilize two charts. You can still do it on one single chart, but if you have the opportunity to place it as two charts together, well, then that actually just makes it a little bit clearer and easier for you to use. What we're going to have is we're going to have one chart, okay, our top chart, which is our bias chart or our trend direction. So that's the chart we're going to look at to identify what, if any, direction or trend is in place. And then we'll have a second chart, which is for our execution. It's our trading chart, all right? And this is where we will take interest into overbought and oversold readings on the chart. What we should have, well, and this is very important, is that your bias chart, okay, your trend direction chart should be one time frame higher than the execution chart, okay? So what you might have is you might have a weekly bias chart and then a daily execution chart. Or alternatively, you can have a daily bias chart, but you have a 4-hour execution chart. Perhaps you have maybe a 4-hour bias chart with a 1-hour execution chart. Or then if you're getting down towards intraday trading, well, you might be using a 1-hour bias chart with a 15-minute execution chart. So we're using the higher time frame chart to give us a bias, to give us trend direction. And once we've identified that, if there is a trend, sometimes there isn't, but if there is a trend, we can utilize that to identify the bias, and then we move down to a lower time frame to give us the opportunity for an execution, which is what we're going to explain how to do in the next few slides. Okay, so it doesn't really matter what you're particularly trading. Maybe you're a trader of gold, maybe you're a trader of Bitcoin, maybe you're a trader of oil, maybe you're a trader of the euro dollar. Okay, regardless of the instrument, this is what you're going to be looking for, okay? You're going to have a higher time frame bias trend direction chart and a lower time frame execution trading chart, okay? And when they work together, they'll work nicely, as we'll just show over the next few slides. So when we have clear trend bias on the higher time frame or the bias trend direction chart, you then drop to the lower time frame execution chart and look for an opposite environment. What does that mean, Paul? You might be saying. So when the bias chart, the trend direction chart is bearish, it's when it's actually moving down. Well, what we're looking for on the execution chart is actually bullish conditions. We are looking for bullish conditions. We're looking for the opposite because we are looking for pullbacks in this particular case, a downtrend, okay? And when our trend direction, our bias chart, our higher time frame chart is bullish, and we have an upwards going trend, well then on our execution chart, we're going to look for bearish conditions on the execution chart. Because remember, you are looking to effectively trade pullbacks in a trend. Then once you identify that, well, then you can utilize simple price action setups to take a trade in the direction of the higher time frame or bias chart. And if you're not really too sure about price action setups, I can assure you, me and my colleagues, Marcus and Jens, we've put out a huge range of webinars in the Trading Spotlight archive that cover all different manner of price action setups. Please, if you haven't seen them before, go and look on the Traders Yard group or on our YouTube channel or on our Facebook page, and you'll find a wide range, okay, of webinars in the archive there that will give you lots of different specific price action setups. For today, we just want to give you a plan, a simple plan that you can walk away from and start to utilize from this afternoon, from tomorrow, in your own particular trading. So what we've got here is, I'm just going to use these here, is that I've just, we can see, we've got here is the Aussie dollar on the 4-hour chart, okay? Aussie dollar on the 4-hour chart, which is my bias chart, okay? There we go. I can assure you, ladies and gentlemen, I'm a better trader than I am an artist, okay? So bear with me, okay? So our 4-hour chart there is our bias chart, okay? Whereas here on our Aussie 1-hour chart, remember, it's normally like a, it's one time frame down. This would be our execution chart, okay? Our trading chart. This is the one we're looking for. This is the one we are looking for to make our trades on. So you know, it's that I have drawn in my just my horizontal, okay, 50 line, all right, on the RSI there. And what I've done here is also I've just drawn a vertical line here to show when price here, or when the RSI goes beneath 50, okay? Goes beneath 50, and actually what that does is then that gives me a bearish bias, okay? I'm expecting a downtrend to move. So as that happens, and you can actually see price does, you know, price moves in a nice downtrend there, as you can see. What happens is whenever the RSI comes back up above 50 on the execution chart, and I've just drawn it in here, okay? Whenever it comes back up above 50 on the execution chart, where those sort of pink boxes, rectangulars have been drawn in, that's when I'm interested, because what I'm looking for is that is when price is overextended in the opposite direction, as it gives me an opportunity to basically, in this case, sell the rallies, okay, in a downtrend, and that's what I'm looking to try and do. So I know that price, my bias, my overall bias in the longer term is down, and what I'm looking for is every time price pulls back a little bit, I'm looking to sell the rally, and that's what how I'm using the RSI on both the sort of the higher trend direction bias chart, and also I'm using it on the lower time frame execution chart. So you just, you know, you're utilizing, you know, what is, you know, quite a simple popular tool, but you're just being a little savvier with it in terms of how you operate and how you look to execute your trades, and that will allow you to just basically, you know, just as I said, operate just a little bit smarter in the in these particular markets. So how can we use that information to help us build a simple trade plan? Well, once we've identified our particular trades, well, then we just have, you know, just have a case of understanding, you know, simple trade plan dynamics. So once we've identified a particular extension, all right, in our execution chart, all right, that allows us to do, we're looking for a simple price action setup. Well, as standard, risk management is key, especially in these particular climates. So your stop loss would go above the recent high or the low, and I'll show you that in a moment. And you stay with the trade until it exits the opposite overbought or oversold conditions. And I'm going to show you that on a chart. So if we have sold, okay, well then once price has actually risen to the oversold area on the execution chart, well then we would look to exit our trade. So that means if you're selling on overbought conditions, then you stay with the trade until it exits oversold conditions. Or if you're buying on oversold conditions, then you stay with the trade until it exits overbought conditions. And that's what we're going to show. And I'll show you on a few charts, and I'll show you on the trades themselves from this afternoon. Okay, we can have a look at that. As I said, have a look at the live markets. That will help us understand it a little bit better. Is that Lauren too? I apologise if I've not pronounced your name correctly there, but please bear with me. Your question is, please, what platform to use, MT4 or MT5? For this particular trading plan, you can use either, right? You can use either MT4 or MT5. Both of these setups will work on either of those platforms, and they will also work across any of the instruments that are available on either MT4 or MT5. Okay, we want you, we want you to be versatile. Okay, we want you to be versatile traders, able to sort of trade any instrument in any direction on any time frame. To have the tools to be able to do that, that would allow you to sort of develop your trading business. So let's just have a little bit more of a look in depth here, okay, with some examples as we'll go on to just show you how we can look to actually actively trade this and what we'd be looking for when we're doing that. Kumaran says, are there any settings or parameters for the RSI? In this particular case, okay, Kumaran, we're not actually requiring any, let's say, specific, okay, or unique settings. The RSI normally comes with a standard 14 setting, and that's what we're utilizing here, okay? Yes, you could adapt it for particular instruments, and you could do your own research on that, but what we're sharing with you today is just using the simple tools that are on the platform for you. Furthermore, okay, all we're looking to add is we're just looking to draw in that 50 horizontal line, and I'll show you how to do it. We're going to switch across to the live charts in a moment. I'll show you how it can actually develop there, okay? And that's what we're aiming to move towards. So, as I said, here it is Aussie dollar, okay? This is the 4-hour chart. Let's just draw in some tools. Aussie dollar 4-hour chart. And this is going to be our trend direction chart, okay? What we can see here is that, price is actually, the RSI, the indicator, has dipped beneath our 50. Okay, so we know that we're actually looking to have a bearish mentality. Okay, we're looking to be sellers. So we know that, and what we've done is, I've drawn in this horizontal, this vertical line, apologies, on here, just to remind me that actually once that price is, once the indicator has dipped beneath 50, that invariably, okay, I know that in my head, I'm always looking for the bearish side. Okay, my bias, my trend direction is to be a seller. That's what I'm looking for. Then what I do is I drop down to my next time frame, okay, which in this case is the 1-hour chart, right? That's what I'm looking for. And then what we're looking for here is, if I just drawing tool, is that I'm looking for, remember, if I have a bearish bias, okay, from the 4-hour chart, well then, every time that price gets above the 50 period, the 50 line on the RSI, as we can see here, I'm just drawing these pink boxes here. Every time that happens, well, then I'm looking to see, is there an opportunity for me to take a short trade? All right. I'm looking for price to be overextended on the lower time frame, on the execution time frame, in a pullback that allows me to join what I believe will be the dominant trend. Now, that dominant trend from the 4-hour bias chart is that I want to be bearish. And what we can see here, and I was just drawn, is that as the price is pulled back and it's hit, in this case, the 50 period moving average, what we've had is a rejection candle, a simple price action rejection candle, which allows you an opportunity to short that particular the particular market there. It comes back here again, and price actually once again it puts in a rejection candle there. Okay, it's into bullish territory, okay, on the execution chart. And what we look to do is when we see a rejection candle, well, then that gives us an opportunity to short our particular market. And we can see it again, okay, in this particular example, price comes up, but doesn't really give us a terribly good price action bearish signal. But when it happens again, just a couple of bars later, a couple of next day, you can see that actually we get a double top, which also finishes with a rejection candle, allowing us the opportunity to short. Now, of course, once we've shorted there, we have to say, well, where are we getting out of these trades, Paul? Now, if you remember, okay, what we're looking for is that as price we take our short in this particular example, we stay with it until price enters, in this case, the oversold conditions. And when price exits, well, that is where we exit our trade as well. Okay, that's what we'd be looking to exit. In this example, you know, even though you're short here and you're short here, it's not actually until price gets beneath the 30 there and comes back out of it that actually we would be looking to exit our short trade. And what we have happens here is that we still have our, we know we have our, you know, our higher time frame bias, and then as price pulls back again, price goes into the bullish territory on our execution charts, RSI, then it provides us with rejection candle, rejection candle, rejection candle, which gives us 3 opportunities to short that market. Price follows down, and it's actually not until it comes out of our, here we go, until it comes out of the oversold conditions that we can exit that trade. So what we've done there is created, you know, quite a few opportunities for us just by identifying higher time frame bias using the RSI, and then using our execution time frame charts. So every time pulls back to actually give us an opportunity to sell rallies in a downtrend. We're looking to effectively trade pullbacks in a trend. And that's how we're looking to use this particular RSI plan to help us just, you know, very simply get on board sort of dominant trends when they occur that will allow us to do that. So I think Carl says that when we open a trade with the RSI, we don't set a stop loss. No, that's not correct at all. Okay, as we just put on a slide there, a couple of slides before, when you're looking to take you know, for example, a short here on the rejection candle, your stop loss goes above your most recent high. Your stop loss, you always trade with a stop loss, and it should be above the recent highs. Okay, that's what you're looking for. Stop loss will be just above the recent high. You never take a trade without a stop loss, okay? Because, you know, things change. You can see, especially in the volatile market environments we have at the moment, markets can change on a sixpence. If you want to know more about that, watch the Trading Through a Crisis webinar that we put on a couple of weeks ago for yourselves. You'll find that in the Trading Spotlight webinar archive. But for this, you never ever trade, you know, without a stop loss, and it always goes above the recent highs for a short or beneath the recent lows for a long trade, for a buying trade. So Sonia asks, you know, you've got some moving averages here. Yes, I do. These are just very standard moving averages that we have through all of my webinars here. I have a blue 20-period moving average, a red 50-period moving average, and a green 200-period moving average. And I also have fractals on that. Very, very simple chart setup. Okay, there's not really much on my charts. I like to keep them relatively clean. Okay, that's what we're looking for. And, you know, as we were saying before, once you've identified where your entries are, okay, for these particular trade setups, well, you're looking to stay. Your target is to basically look at how once price taps into the other side of the RSI indicator, once it actually comes back out. So, you know, what you'll find here with this is, you know, certainly with, you know, with using it for exits, you know, are you going to capture every pip of a downtrend? No, you're not. Okay, no, you're not. That's unlikely to happen. But you're not trying to capture every pip in a move. What you're looking to do is to take a kind of a higher, you know, a higher reward to risk entry that would allow you to basically, in this case, sell the rally in the downtrend that would allow you to sort of, you know, take a piece out of a trend move. And that's what we're looking to do. It's very, very rare that you actually can sort of nail the exact start of a trend. And it's very, very rare that you can actually nail the exact end of the trend. Okay, there is always going to be, all you're looking to try and do is capture a piece in the middle of that particular trend. Okay, and if you can do that, well then, you know, you can do very well as a trader. Sonny says, is this on MT4? Yes, this is for MT4. But as I said before, MT4 or MT5, this is absolutely fine. And in fact, any particular trading platform, it's not specific to a trading platform. This works as well on MT4 as it will do on MT5. So here's just another example here of this. This time our bias, okay, our trend direction, our higher time frame chart is actually the pound against the Australian dollar on the weekly chart. And what we've just done here is I've just drawn in, I've got my horizontal 50 line. And once the indicator crosses above and closes above the 50 line, well then, I've just drawn in a vertical green line just to get my head thinking about how we're looking to be. I'm looking to be a buyer. I'm looking to be bullish, a bullish bias. All right, and so that's what I'm seeing when I see price here. Okay, so I know what my bias is in terms of my longer time frame. Okay, the higher time frame. I know what I've got a bullish bias here. And now what I'm looking to do is, well, I'm looking to see what's going on my execution chart. So remember, my execution chart is one time frame lower. So in this particular case, because we started off with a bias from the pound against the Australian dollar on the weekly chart, my execution chart is based upon the daily chart. Okay, it's based on the daily chart. It's one time frame down, it's one time frame lower. And what we're looking for is, remember, if we've got a bullish bias on the 4 hour, well then what I'm looking for is every time the indicator drops beneath the 50 period, the 50 center line, that is telling me that price might be overextended in the counter trend, and this gives me an opportunity to get on board and sort of in this case buy a pullback to allow me to join the trend. And you can see it here, okay, and they're just where price dips back beneath the 50 line. Well, what we have here is we've got a couple of rejection candles there, okay, giving us an indication of price moving up. It happens here again, price pulls back. You can see price pulls back, in this case, into the 50 before putting in a key reversal candle, and then price rallies up, okay? And what I've drawn here is, remember, if we're buying when price is in a bearish zone on the execution time frame, well, actually it's as price exits the overbought area, that's when we'd be looking to exit out of our trade. Okay, so we're looking to be entering here, okay, entering here, and then we'd be looking to exit our trade here. Okay, now of course people might say, well, Paul, do you know what, the trade goes on, carries on going higher, and it does, but remember, that's hindsight. It's very easy in hindsight to say, oh well, yeah, you could get in here and you could get out there. When it comes to the reality of trading day to day, it is not as easy as that. Okay, and what we're just looking for is a simple way to just join a trend on a pullback, and then take some good trades that allow us to sort of give us a higher probability of basically just being able to kind of surf the next wave in that particular trend. And what we can see is, price here, for example, it dips beneath the 50, but actually the price action there doesn't really, there's no sort of real bullish price action there in that particular case. When we come back down here, we actually have to wait a couple of candles before we get a bullish engulfing candle. When we come back down again beneath the 50, well, we have to wait a candle or two to get a kind of a nice bullish candle before price rallies its way up, and then it actually gets into overbought, it comes back out. So the reality, you'd have probably been getting out around about here, but you've still taken a nice profitable trade. Okay, you're still sort of, just as I said, you're just looking to take bits out of the trend. Trying to capture the exact start and the exact end of the trend is rarely, if any time, works. You're just looking to be able to surf parts of the wave as the trend is in place. So here's your homework to take away for this week. Go through your favorite charts and identify possible RSI trading opportunities using the bias and the execution charts. How often did they occur? Where did they occur? Okay, and did it provide you with a good trading opportunity? So if you're in lockdown, you're doing a bit of self-isolating, it's an opportunity to just go away and actually just look at this and find out, and identify where, how to use a bias chart, how to use an execution chart, with the RSI, and utilize that for your own trading opportunities. So in conclusion, the RSI is a very popular trading indicator. It's been around since the 1980s, but most newbie traders use it incorrectly because they're just basically selling when it's overbought, buying when it's oversold. Add the 50 center line to help you establish trends, to establish a bias in that market, and look at using a bias chart and an execution chart to create a simple trade plan. And what you're looking to do is effectively help you trade pullbacks in trends. And we've got a few minutes left. We'll just have a quick look on the live markets. But if you want more support, well, then come and join the exclusive Trading Spotlight community. You can see it there on tradersyard.com, tradersyard.com/group/312. I'll be in there for the rest of the afternoon. I'll happily take your questions about this trading plan. You'll also see my colleagues, Marcus and Jens. They're posting stuff every day. Really good content there for you to look at into how they trade markets themselves. And don't forget to join us next time. You join Wednesday, okay? My colleague Marcus is going to talk about how you can learn about the secrets of successful traders as they share the stories of some of the world's most successful traders and investors, learn how they trade and what strategies they use. Look at that on Wednesday on April the 8th at 2 p.m. and just check your inbox for the webinar link. You'll find plenty of great content and useful information and insight on the admiralmarkets.com website. And as always, if you want to contact us, you can drop us an email at hello@admiralmarkets.com, youtube.com/admiralmarkets, facebook.com/admiralmarketsglobal, where you will also see the recordings of previous Trading Spotlight webinar series. So if you want to identify more about identifying trends, or if you want to learn more about price action setups, you'll find there are lots and lots of webinars in there that will help sate your need for more trading ideas and thoughts. So I hope you found that useful, but as I said, we're just going to quickly switch across to the charts for a couple of minutes and just have a quick look at something that's maybe gone on this morning to give you a little bit of an idea in live markets. So if you'll just bear with me for a quick moment, we'll just switch across to the charts. Okay, so here is this is a chart. Hopefully you can see this is Admiral Markets, MetaTrader 4. Okay, you can see, hopefully you can see this quite clearly there. Okay, hopefully it just shows. And just looking here, euro against US dollar is a very popular trading instrument. Okay, and it's a case of what we'll see here is here. This is the 4-hour chart. Let's just have a look at here. Okay, here we've got the 4-hour chart on the euro against the dollar, and what we can see is last week is that actually the indicator went beneath the 50 line. Okay, it popped up a little bit, but actually it continued back down, and that the sort of direction of travel has been to the downside. So I know on my 4-hour, okay, that I have a bearish bias. So now, I know from my 4-hour chart, I've got bearish bias, okay, in euro dollar. Well, now I want to look at, well, I need to see, how do I execute? How do I trade? And if I go down to my 1-hour chart here, okay, you can see, I drew in my, drew in the area where the 4-hour chart has gone to the bearish bias. So, as soon as I look at it, I know, okay, I want to be a bear here. And when price actually pulls back, and you can see here, price pulls into the bullish environment. It does the exact opposite on the 1-hour from what it is on the 4-hour. This, as we can see, is price having been sort of a pullback in a downtrend, and that's what we saw here. And if you're looking here, okay, what we had here was a selection. Okay, there's a selection of rejection candles. Also, it might be said that they were kind of capped out by the 50 period moving average, but there were rejection candles here. Okay, there are all quite a lot of pin bars there that allow you to sort of short that. Okay, short that market around about kind of 110.20 with stops. Remember, stops above the recent high, so stops about 110.40, and then basically price just falls away. And as I said, it's price. You wait for price to get to the other side of the RSI. Okay, in this particular case, because we've been a seller, all right, where price gets into oversold territory and starts to come out, that is when you're actually looking to exit the trade. Okay, so you'll be looking to exit that case probably about with the spread about 108.55. All right, so you're shorting from, in that case, 110.20 down to about 108.55. Okay, that's that's a nice particular trend trade. Okay, yes, price does continue to go down, but you don't know that. Okay, you don't know that when this price is here, okay, and you're making a decision, and actually price continues. what we see is actually sort of earlier today, price actually popped its way up here, okay, just above the 50 there, okay, on the execution. Gave a little pin bar there, a little rejection candle before price dropped away on the shorts, okay. That's what you'd be looking at there, okay. So that's just, you know, a one quick example there, okay, of looking at it on the euro dollar. Let's have a look at gold, shall we? We had a little look at gold there this morning. Gold, okay, in a shorter time frame is, you know, we have here, this is the 1 hour time frame. Let's have a little zoom, quick 30-second move, and we'll just go here. Excuse me, is that what we saw is we could see that, you know, price, okay, sort of Thursday came up here above the sort of 50, okay, on the 1 hour chart. This is, we're intraday trading. This is our bias chart. So, you know, we're looking to be bullish, okay, on gold here as prices above the sort of the 50. It's into where we've got a bullish bias. So now I'm looking to move down, okay, and the 15-minute chart, if I just zoom out, I can see there where I've drawn in my vertical line from my 1 hour chart. I know that actually, you know, I've got a bullish bias. I'm looking at 15-minute charts, and we can see that as price actually dips, in this case, beneath the 50, okay, every time it pulls back, all right, and then it gives us rejection candles, there are the opportunity to get on board. Price does it a few times, it comes back, the RSI comes back below the 50, and when you ally that with price action candles, rejection candles, that gives you an opportunity to get on board the trade, okay? So you're looking at an opportunity to effectively just, in this case, buy pullbacks, okay? Buy pullbacks in the dominant trend. So there you go, ladies and gentlemen. Unfortunately, we've run out of time. I appreciate that we could talk about this for well, for the rest of the day, quite happily, quite easily. But we really appreciate you joining us. This recording will be up, as I said, on Traders Yard and Facebook and on the YouTube channel soon enough. And if you've got questions about it, please just drop those questions into the YouTube channel. We love them. We can try and help you wherever we can. And hopefully, this has given you just a little idea of how you can utilize the RSI to build yourself a very simple trading plan using the RSI. Trade well, ladies and gentlemen.